Nestle missed slightly on the top line, but Barclays analysts already putting out a note saying the direction for the company is going the right way. And I'm pleased to be joined by the CEO, Mark Schneider. Thank you so much for joining us.
Thanks for having me.
I want to start with that organic revenue growth. It was a slight miss, and many analysts don't think you're going to be able to get above 4% for the growth. Why the delay in getting to that mid-single-digit growth into 2021 and 2022?
So let's start with 2019 first. We were super pleased with the organic growth of 3.5%. That was exactly in line with what we had guided and reconfirmed in previous quarters. It was always clear that the first half was going to be stronger than the second half. We sold the Nestle Skin Health business, which grew at close to 10%. Effective September 30th, 2019, and hence that growth contribution was missing in the latter part of the year. So for those people who correctly incorporated that, we came in exactly as we guided. Going forward, we are also optimistic about organic growth continuing to grow over and above the 3.5% levels. What we're saying is we'll need another year or so to get to the 4 to 6% range that we're targeting ultimately. So stepping back, we're a year early on delivering margin improvement. We're going to be probably a year later or so when it comes to organic growth improvement.
So you'll get there, it'll just be a bit delayed.
We will get there, and we have lots of initiatives in place to make that happen.
I want to ask you about the coronavirus. I know you spoke a little bit about with some reporters after the results. You have 31 factories in China, and you said some of them are reopening, but reduced capacity. How many are closed at the moment?
So the large majority of these plants has reopened earlier this week. Remember, nutrition products are essential, and so it's in everyone's interest that we have uninterrupted supply. Of course, safety of our employees is very important, and we also want to be in full compliance with any rules here to restrict the outbreak of the virus. It's going to be a reduced rate, though, because transportation capacity is lower than usual, and not everyone was able to return from their home province after Chinese New Year to their workplace. But above all, I think, we have key products here where everyone's working hard to maintain supply.
And so far, you've seen no impact on your financials. Are there anything you can say about how this is really going to hurt your business?
As we said in our guidance, it is too early to quantify the exact financial impact. January was a low part of the year anyways because of Chinese New Year, so it's from now on and counting that we need to see where exactly it goes.
I want to also ask something else about China. More than 30% of disposable income comes from consumers in China spent on food. How about your mass market brands in China? They've been under pressure for years. Is there a solution to revive some of these brands?
Well, overall, we're doing really well on premiumized products in China. So the Chinese do have an appreciation for fine food and beverage products, which is great because premiumization is one of our big themes. We also have a whole lot of mainstream staples. And yes, over time, we also work hard to make those more attractive, get a premium aspect to them.
Like Yinlu.
Well, Yinlu is one of the products where we've been struggling for a while. Here it's not so much for mainstream versus premium. It is more that a category, which is peanut milk, has been falling out of favor. We're trying to replace that with ready-to-drink coffee products, which are, of course, strongly on the up.
I want to ask you about China in the sense of luxury, because you have a 23% stake in L'Oreal. Food and drink companies, for the most part, could be pretty resilient to a Chinese slowdown, even things like a Hong Kong protest or coronavirus. But luxury, we've seen that get hit really hard. If you were ever to think about offloading L'Oreal, I know you say it's not up for a question really, would now be the time to start considering that?
We're not day trading in the L'Oreal stock. We've been very, very happy shareholders for a long period of time, more than 40 years. I think this was also in the best interest of Nestle shareholders. And so at this point, beyond that, I don't have very much to say.
But what would force you to maybe sell it or part of it? How big of an acquisition could that look like?
Wouldn't want to speculate. As you know, we have lots of headroom and cushion in our balance sheet anyways. But this is an option because, as you know, it is a financial stake. So if needed, we could tap into that to help finance an acquisition.
You just marked this January 3 years at the helm. You are on track, exceeding your track of this 10% portfolio trading targets. What else can we see you possibly offload in the next 1 to 2 years?
So looking back over the last 3 years, we had a portfolio transformation of about 12% of group sales, and so pretty significant changeover, trading into higher growth, better margin opportunities, and also products that are more on trend. What we're saying today is that going forward, expect similar levels of activity for the next 3 years. We've stayed away from precisely targeting, of course, what comes next, but expect us to be very busy on the portfolio transformation front going forward.
Will it be more, you think, offloading or potentially acquiring something that you think could do well under Nestle with the correct leadership?
I think it's going to be a balance. Last year, if anything, was a little light on the acquisition front. There was only one acquisition, Persona. This year has started already stronger with the Zenpep acquisition by Nestle Health Science. And so I think going forward, a healthy balance here of buying and selling is what's in our best interest.
When I think of offloading, I think of bottled water, only because this report showed it was the worst performer in a decade. So that's been struggling. What does the future of bottled water look like under Nestle? How will this change now from today in, say, 5-10 years?
Not all bottled water is created equal, so there are segments that are incredibly high growth, high margins, and there are others that are more under pressure. We have committed that we will take pretty energetic steps to turn around this business. We started by changing the structure of the business, folding it into our 3 geographic zones. And you can see us this year tackle this pretty decisively to make change. Beyond that, at the moment, I would prefer not to comment.
I want to ask you about what CocaCola had to say about bottles in general at Davos, saying that they won't ditch plastic bottles. Consumers want them. Where I see consumers actually saying they want to ditch plastics. They want to move into more sustainable, and they want brands to reflect that. Do you think Coca-Cola is wrong?
I think it's about doing the right thing in the right place for the consumer. So in some places where you have perfect recycling systems, the future could be a plastic bottle. In other places, it will be reuse, refill systems, and yet other places it may be biodegradable materials. So I think looking at all options at the present time is the best way forward, and this is what we're committed to do.
You focus your business on nutrition, water, coffee, pet care. A lot of people have talked and speculate that you want to maybe get excited about consumer health care. And this is one area where it wouldn't actually come under a lot of antitrust regulation. So it actually could be very enticing. Is that something where maybe your mind is looking at for 2020, 2021?
Well, we said this very openly, that in addition to these 4 high-growth categories that you mentioned, we are also very interested in expanding Nestle Health Science, which is our vehicle into consumer healthcare. The key here is this is focused on nutritional products. So consumer healthcare, as in headache pills, that's not our future. Our future is things that have to do with nutrition and metabolism. And I think this is where we'll go and expand, just like we did with the Zenpep acquisition that we announced a few weeks ago.
Right. So would this be more through acquisitions or homegrown?
Well, I mean, this is also one of our strongest growing businesses, high single digit. So, you know, things get really exciting when you do acquisitions and you grow like crazy on an organic basis at the same time. This is what health science is doing.
You're also very excited about plant-based products. You've joined the burger craze, or the vegan burger craze in Europe and the US. You teamed up with McDonald's in Germany. But do you think you're falling behind in the fast food sector? Or is the strategy to go via supermarkets to sell these kind of products?
We are really, really excited about this space. To give you a sense, this is growing strongly double digit. We're now at about 200 million Swiss francs in revenues. Beyond that, it is about so much more, and that is re-energizing and redefining our 12 billion Swiss franc food business, where plant-based helps you to go after a younger, better educated, more affluent target consumer, because people want this. So whether it's on our frozen pizzas as a topping or whether it's as a burger patty, I think there's lots of opportunities here way beyond the burger. So think about chicken products, think about sausage, think about meatballs, think about ground beef.
My colleague yesterday tried your faux tuna.
And now we're going into
favorite?
the plant-based tuna. Tuna salad, I think, is a wonderful product that will hit the store shelves later this year. So we're right out there. We're competing. And to your question, it's going to be retail and fast food restaurants. I think, you know, this category benefits from playing both sides of the street.
We have all these rise of companies, though, like Just Eat, Uber Eats. Is there an opportunity to ever team up with a company like that? There must be, either through the dark kitchens or being their sole provider as a retailer.
Well, it's not so much about a sole provider, but there's a business opportunity in teaming with them so that some of the things that get delivered home contain also either ingredients or products that are made by us. But let me also tell you that we offer something else at the different end of the spectrum where you don't need a delivery service. So take frozen foods, which I think are seeing a strong resurgence because of the sheer convenience of taking something out of your freezer, putting it in the microwave, and then without any delivery hazards, 2 minutes later you have a meal.
But could you see yourself ever talking to Uber Eats or Just Eat, a sort of partnership?
Well, we are talking on a pragmatic basis with all of these delivery services. Again, I'm not so convinced about exclusive or non-exclusive. It's more about getting the products in there.
I want to ask you more about sustainability. I know this is something that you really care about. And we do sometimes see different restrictions in certain countries and different approaches from different companies. Do you think governments and even the private sector need to have their thinking more aligned on how they're going to combat this and fight climate change?
Look, I think this is a time when people increasingly look towards business as a force for good and making something happen. So this is our part, and we are fully committed to playing that part. Remember, this is an area where no one has all the answers, and a certain amount of trial and error is necessary. So I'm not sure it's about aligning. It's about simply doing more on the things we know. And so that's why, for example, our 1.5 degree commitment and the pledge to be carbon neutral by 2050 is so important. That's also why our plastic efforts and the idea that by 2025 our packaging is going to be recyclable or reusable is so important, because that also comes as a support to the climate goal targets.
I think of the UK, though, because when 100% recycled PET bottles, there's no market for it. They have to import all of these bottles. Is there a way companies you could influence what governments are allowing and restrictions and whatnot?
Glad you're asking the question. The best way we can do it is by giving people certainty of demand at very good prices for recycled material. Hence, we just committed a few weeks ago to purchase over the next 5 years up to 2 million metric tons of recycled food-grade plastics at a strong premium. And I think when that happens, a lot of people will lobby, a lot of governments, a lot of people will put infrastructure in place. This is how you get a market going, and this is going to be one of our contributions.